Hey, welcome back. Today is April 11th, Sunday, and on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, and see how they could potentially affect the overall altcoin markets before diving into HBAR token, HBARUSD, and see what is going on in here. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market according to what I'm seeing on the charts. Before I begin today, if you guys are enjoying this content, make sure to subscribe to this channel and like this video, as I'll be keeping updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and a qualifying deposit of $100 US. And I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I am purely sharing my own speculations and opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you have any questions or comments, please only leave them in the comment section below, but I'll try my best to get to as many of them as possible. Now, see what's going on in this market first. Most importantly, I do take a look into Bitcoin dominance. It tells me what the money could be trending into. Would it be Bitcoin, altcoins, or neither? Today, we have Bitcoin dominance down about 0.7%. This breaks down to Bitcoin down about 0.1%. Total altcoin market cap up almost 1.5%. Now, this is the upside of Bitcoin dominance trending downwards, as I would see total altcoin market cap leading in gains ahead of Bitcoin. I usually emphasize Bitcoin dominance to trend downwards. That's generally speaking better for the altcoins on both the upside and downside. Because conversely speaking, if Bitcoin dominance was trending upwards, the upside of that, I will usually see Bitcoin leading in gains ahead of total altcoin market cap. On the weekly time frame here, we are still in a falling wedge pattern, which are generally bullish patterns. If Bitcoin dominance actually breaks to the upside here, it would not be as ideal for the altcoins, because the best case scenario in that sense would be that if Bitcoin is actually trending higher with Bitcoin dominance and total altcoin market cap trailing in gains behind Bitcoin. However, the downside of this, the worst case scenario if Bitcoin dominance actually trends upwards, would be if Bitcoin pulls back, the total altcoin market cap will be filling it more on the downside. Let's go over to Bitcoin, where I have pointed out there is still bearish divergence playing out on the weekly time frame here, as we did get 2 consecutive higher highs here. However, 2 consecutive lower highs on the RSI. That's classic bearish divergence, and bearish divergence more often than not can still signal a pullback. The safer signal I am looking for here to tell me that the bearish divergence on this time frame is done playing out would be seeing a higher high on the price action chart along with a higher high on the RSI. The last high RSI reading I'm looking to beat is about 75 here, coming from this little top, okay? Let's take a look into the monthly time frame for Bitcoin, where we are still in overbought territory along with some bearish divergence as well that has yet to play out. Not something I'll lose track of, because if it actually does play out, it could still have a bearish effect on the altcoins. Okay, generally speaking, when Bitcoin pulls back, it could still have a bearish effect on the altcoins. The effect will be greater if Bitcoin dominance is trending higher. And do take a look into the last few times where Bitcoin did get into very overbought territory. This is on the monthly time frame. Each data point on here is 1 month's worth of time. Let's take a look into HBAR here. Let's go from the monthly time frame down to the daily time frame, which I consider to be macro time frames, and see if we have any overbought RSI readings or possible bearish divergence scenarios. Monthly time frame here, we're currently about 88, so still in overbought territory. Weekly time frame here, we're currently about 81. In overbought territory, and if the price action was to make a higher high here, it does need to beat the last RSI reading of about 89 here to negate bearish divergence. 3-day time frame, we're currently about 72, slight overbought territory, and very similar thing can be said here about negating bearish divergence, and I'll be looking at this top right here if it was to make a new high. Daily time frame, we are not in overbought territory here, we're about 58, and very similar thing can be said about possible bearish divergence and negating it if the price action was to make a higher high here. Let's take a look into what I could be dealing with here and what has happened since last time. Since last time, I did mention that there was a ascending triangle pattern that looks something more like this. However, the price action did break to the downside, okay? Went as far down as about 28 cents here, slightly under 28 cents before rebounding, okay? Now, let's see what I could be dealing with here. I do see a possible double bottom pattern here with the neckline to be about 40 cents. Okay, I did lower that resistance because for this double bottom pattern, I can actually get a trend line across more than 3 candles, at least 3 candles. And the 40 cents would be psychological resistance where we had not had any daily candle closes above this resistance. So I thought that would make sense to be the neckline. The measure target of this double bottom pattern here, which would be taken from measuring the neckline to the bottom of the pattern and then adding it back on top of the neckline. This would be a conservative measure target because I'm excluding some of these outlier wicks on top of the resistance. The measure target here will be about 53 cents, slightly under. Now, measure targets are theoretical approximate targets only. May actually be different in real life price action, more or less. Let's take a look into some of the key supports and resistances relevant to this price action right now. Key resistance immediately would be the 40 cents neckline here. Next up, I could expect resistance coming from past trading history, even right above that 40 cents level, from 41 cents to about 46 cents as well. After that, I can only guess from psychological resistance since we had not had any past trading history here that goes up to this level. So I could guess psychological resistance of whole numbers where traders are likely to take profits at about the 50 cents level. Key support immediately would be the 35 cents fib level area, follow up by the daily 21 MA, which is the blue line right here. If that does not hold, I could potentially be looking back down at about the 30 cents fib level area again, which has been holding up the price action for the past couple of weeks. If that does not hold, it'll be the daily 50 MA that's coming up to the price action as well. Now let's take a look into the bullish and bearish case scenarios. Bullish case scenario, price action breaks above the neckline of 40 cents, gets daily candle closes above the neckline and staying closed to go towards its measured targets, also mining some of those resistance levels I have just pointed out. Bearish case scenario, price action starts breaking support. I think the key support I'm looking at would be the daily 21 MA right here, because if the price action actually breaks the daily 21 MA, then I could potentially be looking at a pattern that's more like this instead, okay? If it actually breaks this daily 21 MA, then the price action could be heading back down to about the 30 cents fib level area again, and this could be a possible chart instead of the double bottom chart. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I'd love to hear them. Hope you manage your risk carefully, and if you'd like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.